Now that tax season is well behind us, do you have a tax game plan as a locums doctor? Being a locum tenens doctor comes with a lot of flexibility, higher pay rates, and freedom. But without a tax game plan, that freedom can quickly turn into frustration, as many of you have probably experienced. Today, I'm breaking down why every locum tenens doctor needs to have a proactive tax strategy and how it could save you tens of thousands of dollars each and every year. Welcome to the Locum CPA podcast. My name is Stephen Lee, a CPA that specializes in locum tenens medical doctors. In this podcast, we're going to be talking about several things that you really need to hone in on as a locums doctor. Things like mentality, taxes, choosing the right structure, maximizing deductions, retirement, investment planning, as well as multi-state taxes. And with each and every topic, I do have some actionable tips that you want to stick around to the very end. So the first one, let's get right into it, is mentality. You have to think as a locums doctor, you are a business, not just a doctor. Once again, it's the mentality shift that you have to think of yourself as a business, not just as a doctor. What that means is usually you are a 1099 independent contractor. So you are your own business. Remember, as your own business, no taxes are withheld from your pay and you are responsible for paying them. The IRS sees you as a small business, okay? So you have to really change that mentality that you are not just a doctor, but you are a small business and you have to handle your own taxes. So for example, you might be making $400,000 per year as a locums doctor, but without tax planning, your tax bill could easily exceed $100,000. So you want to make sure you have that mentality of being a business, not just a doctor. And that ties right into number 2 is estimated tax payments. So more specifically, estimated quarterly tax payments. The IRS requires you as a locums doctor to pay quarterly estimated taxes, not just in April, but there are 4 deadlines: April, June, September, and January the following year. So you want to make sure you are well aware that you have to pay estimated quarterly tax payments. And missing a tax payment can equal penalties and interest. Once again, if you miss a payment and you end up paying only in April of the following when you file your taxes, many of you probably experience that you're going to have to owe penalties and interest for not paying it on a quarterly basis and on time. Tax planning and working with a knowledgeable CPA will help you project out and automate these payments. For myself and my clients, I like to meet with my clients at least on a quarterly basis to not only talk about the previous quarter, but also the upcoming quarter. Because for many of you, your income fluctuates. Some quarters you work a lot, some quarters you don't work as much, because you have that flexibility and freedom. So you want to make sure that you're talking to a knowledgeable CPA, at least on a quarterly basis, who will help you calculate and sometimes help you submit those tax payments like we do. Number 3 is entity strategy. So what does that mean is, are you set up the correct way for tax purposes? Are you an LLC, PLLC, or are you an S corporation? Really, there's a lot of tax savings to be had if you form an S corporation, but that's not for everybody. If you've been following along on this podcast, you know that there's a certain limitation in terms of income that you want to be above that justifies being an S corporation. Okay, so really you have to see and recognize, are you the correct entity right now? Reasonable salary versus distributions. Just like in my previous podcast, we really dove deep into reasonable salary versus distributions and how you pay yourself as an S Corp shareholder. Remember, being an S corporation will lower your payroll tax burden. You want to refer back to my previous video on that. Remember, not every locum physician needs an S corporation. Once again, not every locum physician needs an S corporation. There's timing and income does matter, because an S corporation might make sense for most of you, but not for all of you. And for example, let's say your locums business, I'm going to refer to it as a business, is making north of $250,000 per year of net income. What I mean by net income, it's total income from locums work minus your deductible expenses equals at least $250,000 or greater in this example. The S Corp tax savings could be between $10,000 and $20,000 annually, just the tax savings. right, of being an S corporation. So you really want to make sure that you're set up the right way. Number 4 is maximizing deductions. Once again, turning that mentality from step number 1 of being a business, not just a physician. Your lifestyle is tax deductible. There's certain things in your life that you should be utilizing and making sure you're taking that tax deduction because you are eligible. First is a home office deduction, right? Whether you're taking the standard method or the actual method. Number 2 is mileage or travel expenses that are deductible, right? If you have mileage using your own personal car or you're traveling to and from locum engagements, you want to make sure you're recording and deducting those expenses. CME, continuing medical education expenses, licensing fees, scrubs, the cell phone, internet, certain utilities, things like that. You want to make sure that you are working really with a knowledgeable CPA that will help you know what expenses are deductible. Retirement contributions. This is huge. This one is a SEP IRA, a solo 401k, a defined benefit plan. Depending on your locum's income and what you have left over after expenses, there are some powerful retirement tax saving tools out there, right? It's really killing 2 birds with 1 stone. You are not only saving for retirement in the future, but you're also lowering your current tax liability. So you really want to take advantage of those. And one tip I really do have is your tax game plan can really turn everyday expenses into tax saving opportunities. One of my previous podcasts, I talked about how you can travel for free, right? How you can turn vacation expenses into a deductible expense, really combining a vacation with CME, right? Or pre-planning your CME. In my future videos, I'm going to really be talking about how to really incorporate CME planning, where you go, and also try to make that into a mini vacation, right? So there are certain expenses that you can deduct if you're going there for business purposes. Number 5 is retirement and investment planning, right? This is a tax deferral strategy to really help you build wealth. Really maxing out those tax deferred retirement accounts like I just talked about, the SEP IRA, the solo 401k defined benefit plans. You really want to max those out. The S Corp also allows for larger contributions depending on your salary, right? In my previous podcast, you've heard that being an S corporation has the tax benefits, but also there are certain restrictions based on your salary on how much you can contribute to a tax deferred retirement plan. So you want to make sure you're taking advantage of that. And then an HSA, health savings account. This is something that's huge. This is like a health IRA. Think of it as a health IRA. Once again, there's a double benefit here. Not only can you contribute pre-tax dollars, so you lower your taxable income, but also those dollars that you contribute, as long as you use it for qualified medical expenses, that will continue to grow as well, as long as you don't touch it, right? Think of it as an IRA. The less you touch it, the more it will grow, right, over time. Remember, a tax plan isn't just about saving taxes. It's about building wealth for your future financial freedom. And many of you locums doctors really chose locums, whether it's you've had a long career before doing locums, or you're just starting off. And you really want that freedom, not only time-wise, but also financially. So really having a tax strategy will really help that. Number 6 is state tax considerations. Many of you are working in multi-states. You have to remember, you're going to be liable for paying multi-state taxes. Multi-state work equals multi-state taxes. Remember that. You're not just going to be paying income taxes in your home state, but also where the work is performed. You really want to refer back to one of my previous podcasts recently about multi-state taxation, right? Where you work typically is where you're going to be taxed. Remember, working in multiple states can trigger a tax filing requirement, and it usually does. It's usually a non-resident tax return for the income that you've earned in that state. So one of the examples I had is, let's say you are an Illinois-based physician who's doing locums, right? Let's say one of your locums engagements is in Minnesota and Arizona. Even though you reside in Illinois and you work once a week or twice a week, 1 month out of the year in Arizona or Minnesota or different states, you're going to have to file a tax return in those states, possibly an S Corp tax return in those states as well. So you really want to make sure you understand the tax requirements for the states before you sign on, okay? And working with a knowledgeable CPA and talking with them, communicating with them really will help that. Some states give tax credits for taxes paid elsewhere, but some don't. So remember that sometimes you might be relying on a tax credit in your home state for taxes paid in a non-resident state, but that's not always the case. So you have to be careful. And remember, a tax game plan helps you navigate residency, tax home status, and state filings. So you want to make sure you're really, once again, working with an expert so that you can really lock this down. Remember, multi-state tax rules are complex. I have to also refresh myself on so many different rules and changes. So really, locum tenens is a very powerful career move. A lot of us have chose this for financial freedom, but without a tax strategy, you're leaving money on the table. Remember, investing in a tax game plan now, heading into Q2, right? We've just filed all of our taxes for 2024. We're in 2025 now. Make sure you have a tax game plan or you're working with a knowledgeable CPA that really works with locum physicians that is very familiar with that. I will leave a link. So if you are interested in scheduling an appointment in the information section below, so definitely sign up. I would love to meet you. And if you have any questions or any topic ideas, please feel free to leave them in the comment section below. I would love to interact with you. So thank you so much for making it this far in the podcast. I hope this was beneficial and informative. I wish you all a wonderful day, and I'll see you next time. Bye.